markets. Let's bring in Michael Kantrowitz. He's Chief Investment Strategist, Head of Portfolio Strategy at Piper Sandler, and Priya Misra, Global Head of Rate Strategy at TD Securities. Priya, I was just looking over some of your notes, and I think at this point, the market believes that financial stability is going to take precedence. The Fed is torn between market stability and harnessing inflation. You think that they think it's more important, the latter, harnessing inflation, so they're going to raise again.
Yes. So, I would say the Fed views both importantly, but they've got different tools. They've got the balance sheet, they've got liquidity facilities, they've got discount window, all that to deal with financial stability. They've got monetary policy to deal with inflation. So, given how high inflation is, given that the labor market is still strong, we think they go another 25. I think the big challenge is going to be how do they communicate? Because they're supposed to be forward-looking. I think we're seeing this bank crisis more from a liquidity to a capital issue that starts to impact bank lending standards. I think you're going to hear Chair Powell say that they're going to be extremely responsive to data. But the problem today is one of inflation, so they have to hike, and then say that they've got the liquidity tools. I think you're going to hear a lot about the liquidity tools. The new facility that they launched, I think that needs a PR campaign. They need to tell banks that there is no stigma around that, BTFP facility. Banks should access it. That's what it's there for. I think that'll really help shore the liquidity issues. Capital is not something the Fed can anyway do. So I think they're going to try and address both issues. The market is more focused on financial stability, but I think we've got this price stability issue that the Fed has to be extremely focused on.
And Michael, I think it's interesting you say that we could be range bound between pivot hopes and recession fears. And I think we may now be witnessing both. We may, maybe Priya's right, maybe they still raise, but maybe we're in mid-pivot here after things started breaking, and maybe recession fears are still front and center. So that may not be between the two. We may have both.
Yeah, and I think that's exactly what we've seen in the market. Depending on the day of the week, the sentiment of investors, the data that come out, markets are kind of willing to take one narrative over the other. And it's really kind of felt like it's been back and forth, maybe not on a daily basis like it's been the last couple of weeks, but certainly on a monthly and a quarterly basis, going back to really mid-June, so almost a year. And we think that continues ultimately until inflation has clearly been beaten down and goes away, or the labor market starts to deteriorate more clearly in the form of rising unemployment claims. We're in the latter camp. We think that's going to happen in the middle of the year, third quarter. And then it's, in our opinion, that's the beginning of the hard landing story where markets will start to price in a recession.